Here's something almost nobody saw coming this fast. A company that did not exist 5 years ago just quietly handed the most powerful financial regulator in America a secret document that could make it one of the biggest public companies on Earth. That company is Anthropic, the maker of the Claude AI assistant. And on the 1st of June, it confidentially filed what is called an S-1 prospectus with the Securities and Exchange Commission. Think of the S-1 as a company's tell-all autobiography for investors. It lists every secret, how much money you make, how much you lose, every risk that could sink you. Filing it confidentially means Anthropic gets to write that autobiography in private first, polish it, and only show the world when it is ready to sell shares. Now here is the number that should stop you cold. Anthropic was last valued in private funding talks at around $350 billion. To put that in perspective, that is larger than the entire market value of companies like Disney or Coca-Cola. A 4-year-old startup, no factories, no oil fields, just software that writes codes and reasons. The signal this sends to Wall Street is enormous. It means the AI gold rush is about to get its first true blue-chip stock. Over the next few minutes, I am going to walk you through exactly what happened, why Anthropic is doing this now, who gets rich, and the one enormous risk buried in that filing that almost no headline is mentioning. Stick with me, because the part that changes everything comes later. So how did we even get here? Let us rewind to 2021. A group of senior researchers walked out of OpenAI, the company that would later launch ChatGPT. Their names were Dario and Daniela Amodei, a brother and sister team. Their worry was simple but huge. They believed AI was getting powerful faster than anyone could keep it safe. So they started Anthropic with a mission baked into its DNA: build AI that is genuinely helpful but above all harmless. They named their AI assistant Claude. If you have used ChatGPT, Claude is its main rival, the polite, careful sibling that big companies love for serious work. Now think of the AI industry like a brand new railroad being laid across a continent. In the early days, you raise money privately from a handful of wealthy backers who believe in the vision. Anthropic did exactly that, pulling in staggering sums. Amazon alone poured in around $8 billion. Google added billions more. But here is the thing about railroads and AI labs. They are astonishingly expensive to build. Training a single frontier model can cost hundreds of millions of dollars in computing power alone. Private money, even billions of it, eventually runs thin against bills that size. At some point, the only piggy bank big enough is the public stock market, where millions of ordinary investors can buy in. That transition from private bet to public company is the journey Anthropic just started. And the timing is no accident. Here is where it gets interesting. Let us crack open what a confidential S-1 filing actually means, because this is where most coverage skims the surface. Back in 2012, the United States passed a law nicknamed the JOBS Act. One rule inside it lets companies submit their IPO paperwork to regulators in secret first. Why would anyone want secrecy? Picture writing the most important essay of your life, knowing every rival, journalist, and critic will grade the first messy draft in public. You would freeze. The confidential process lets Anthropic trade private drafts back and forth with the SEC, fix problems, and only reveal the final polished version about 2 to 3 weeks before shares actually go on sale. It is a dress rehearsal before opening night. Inside that S-1 sits the stuff Anthropic has never shown the public. Real revenue numbers. Anthropic reportedly crossed an annual revenue run rate in the billions, growing at a speed almost no company in history has matched. But it also reveals the losses. Frontier AI labs burn cash like a jet burns fuel at takeoff. The filing must also list every risk factor, and for an AI company that list is genuinely scary. Lawsuits over training data. The chance a competitor leaps ahead overnight. The possibility that the technology gets regulated into a corner. Investors read those risk pages like a doctor reads an X-ray looking for the hidden fracture. Filing confidentially does not mean Anthropic is hiding forever. It means it controls the timing of the reveal. And that control, in finance, is worth a fortune. But here is the twist nobody expected. Let us make this concrete with real examples, because numbers this big can feel like make-believe. When a company goes public, early backers and employees can finally turn paper wealth into real money. Imagine an engineer who joined Anthropic in 2022 and took a chunk of pay in stock options. On paper, that stake might now be worth tens of millions of dollars, but until an IPO, they cannot spend a cent of it. It is like owning a winning lottery ticket you are not allowed to cash. An IPO is the cashier finally opening the window. Now scale that up. Amazon's roughly $8 billion investment could balloon in value the moment shares trade publicly. That is the kind of return that makes a giant corporation cheer. We have seen this movie before. When Google went public in 2004, it created roughly 1,000 millionaires among its own staff overnight. When Facebook listed in 2012, it raised around $16 billion in a single day. Anthropic's debut could dwarf both, given that $350 billion valuation. But it is not just insiders who care. An Anthropic IPO would let everyday investors, through their pension funds and retirement accounts, finally own a slice of the AI revolution directly, instead of just watching from the sidelines. Your superannuation fund could quietly end up holding Anthropic shares. That is how a private lab in San Francisco reaches into the savings of a teacher in Melbourne or a nurse in Ohio. And this is where things get surprising. Now let us put Anthropic head-to-head with its biggest rival, because this filing is really a starting gun in a two-horse race. On one side, OpenAI, the maker of ChatGPT, with deep ties to Microsoft and a reported valuation that has soared past $300 billion. On the other, Anthropic, with Claude, backed by Amazon and Google. Think of it like the early days of the smartphone wars. OpenAI is the flashy, consumer-famous brand everyone has heard of, the one your kids talk about. Anthropic is quieter, but has quietly won the trust of serious businesses, banks, law firms, and software teams who value Claude's careful, reliable answers. Here is a number that captures the difference. A large share of Anthropic's revenue comes from businesses paying to plug Claude into their own products through what is called an API, basically renting the AI brain by the request. OpenAI leans more heavily on millions of individual subscribers paying around $20 a month. Two very different bets on how AI makes money. By filing first, Anthropic could beat OpenAI to the public market. And in finance, being first matters enormously. The first big AI stock becomes the one every fund manager must own, the benchmark everyone else gets measured against. It is the difference between being the iPhone and being the phone that came after. Whoever rings the opening bell first sets the tone for the entire AI sector for years. But here is what the headlines aren't telling you about why this race is so dangerous. So what does this actually mean for the wider world and for your money? Let us start with the elephant in the room. When a company goes public, it gains a new boss, the stock market, which demands profit every single quarter, relentlessly. Anthropic was founded on the idea of slowing down when safety demands it, but public shareholders rarely want you to slow down. They want growth, faster, every 3 months. That tension, safety versus the relentless hunger of Wall Street, is the central drama of this whole story. Picture a tightrope walker who built their career on caution, suddenly told to sprint across the wire while thousands of investors scream for speed. Then there is the bigger economic picture. The entire stock market right now is leaning heavily on artificial intelligence to justify sky-high valuations. A small number of tech giants account for a huge slice of the market's total worth. An Anthropic IPO pours even more weight onto that AI bet. If AI keeps delivering, early investors look like geniuses. But if the hype cools, even slightly, a stock priced at $350 billion has a very long way to fall. Remember the dot-com crash of 2000, when companies with no profits and big dreams lost 90% of their value almost overnight. Some analysts whisper that AI valuations are starting to rhyme with that era. An IPO this size forces every investor to finally ask the hard question out loud. Is this revolution real, or is it a bubble? Now here's where the real story starts. All right, let us get practical. If this IPO does happen, what should an ordinary person actually understand before getting anywhere near it? Think of this as your simple pre-flight checklist. First, understand the calendar. A confidential filing is not a stock you can buy tomorrow. The public version of the S1 typically appears 2 to 3 weeks before shares trade, and only then does the price get set. So step 1, do not chase rumors, wait for the official prospectus. Second, learn to read the risk section. When that public filing drops, scroll straight to the part labeled Risk Factors. That is where the company is legally forced to confess what could go wrong. For an AI firm, watch for 3 things: lawsuits over training data, dependence on a single chip supplier like NVIDIA, and how much cash it is burning each year. Third, beware the first-day pop. New stocks often spike on day 1 out of pure excitement, then drift back down weeks later once the hype fades. History shows buying at the opening frenzy is often the worst possible moment. Fourth, never bet money you cannot afford to lose on a single stock, no matter how exciting the story. The smart move for most people is owning a broad basket of companies through low-cost index funds, where an Anthropic stake comes along for the ride without putting all your eggs in one basket. Treat any IPO like a hot new restaurant. Let the crowds test it first, read the reviews, then decide calmly. And that brings us to the one thing you really need to remember. So let us bring this all home. Anthropic confidentially filing its IPO paperwork is not just another finance headline. It is a milestone marking the moment artificial intelligence grows up and walks onto Wall Street as a fully public industry. A company that did not exist 5 years ago, valued at around $350 billion, is about to ask millions of ordinary investors to bet on a future built by machines that think. The single most important takeaway is this: watch the tension between mission and money. Anthropic was born to build AI safely and carefully. The public market rewards speed and profit above almost everything else. How this company balances those two opposing forces will tell us something profound, not just about one business, but about whether the entire AI industry can grow responsibly or whether the pressure to cash in wins out. Keep your eye on 3 signals in the coming weeks: when the public prospectus drops, what real revenue and losses it reveals, and whether OpenAI rushes to file right behind them. Those 3 clues will shape the AI economy for the next decade. The AI revolution just stopped being a private club for billionaires and started becoming something you and I can actually own a piece of. That is a genuinely historic shift, and you are watching it happen in real time. If this breakdown helped the pieces click into place, follow for daily AI news, because this story is only just beginning, and you will want to be here when the next chapter drops.